worries were on the retreat, and government bonds, previously a safe haven, saw prices edge down as interest rates edged higher. Markets were partly reassured by news of a U.S.-China trade agreement and a large conservative majority in Westminster, which will give the UK the means to negotiate with Europe. But the overriding feeling among economists, strategists, and investors is that the global economy is now stabilizing. Growth, whether in the economy as a whole or at the company level, will remain slight in 2020. But there is abundant liquidity, and risk premiums could continue to ease. All of which justifies our move to an equity-neutral stance several weeks ago. Markets hit all-time or 2019 highs at the beginning of the week on news that China and the U.S. had agreed in principle to an initial trade deal and sentiment that Brexit worries had declined. However, Unilever's warning on fourth quarter sales due to current trading conditions and a similar warning from FedEx caused markets to stabilize. There was also some timely profit-taking on German exporters like BASF and Bayer. In addition, Boris Johnson's apparent determination to push for a rapid Brexit also hit sentiment, and sterling gave back its post-election gains. European markets nevertheless held on to advances. Curiously, defensives were the most sought after, although long bond yields started to recover. Upbeat IFO data failed to rekindle interest in cyclicals, and autos suffered from fears of more taxes to come. Safran and LySe both fell after Boeing suspended production of its 737 MAX. Deutsche Post dipped after FedEx issued a warning. The S&P was up 1.15% and the Nasdaq 1.81% as of Thursday's close, new all-time highs for both. Once again, indices advanced despite not having any directional drivers and short-term catalysts. Investor sentiment remained positive as trade tensions eased, central bank support continued, and the U.S. economy stayed resilient. Real estate investment trusts, communication services, tech, and consumer discretionary outperformed. They were joined by energy as WTI oil prices gained 1.78% to $61. U.S. Treasuries saw a yield curve steepening amid this end-of-year optimism. In company news, Boeing shed 2.4% over the week on rumors that it would temporarily halt production of its 737 MAX model until the FAA gave its approval for the plane to resume service. Nike's third quarter results were boosted by sales rising more than 10%. The group revised up its guidance for full-year sales. Japanese stocks struggled to make further gains due to profit-taking after last week's strong gains. The Topix edged down 0.22%. In general, laggard value stocks outperformed, catching up growth stocks, which had led the recent uptrend. By sector, mining, information and communication, and precision instruments were the top three performers, while pulp and paper, marine transportation, and iron and steel were relatively weak. Conglomerate Hitachi jumped 8.73%, the best performance in the Topix 100 due to steady progress in focusing on its core business. Fujifilm Holdings, which bought a diagnostic imaging equipment subsidiary from Hitachi, also gained 2.43% as the acquisition of this AI-related strategic business was viewed as good for the company. The MSCI Emerging Markets Index was up 1.8% by Thursday's close as investors cheered confirmation of a trade conflict de-escalation between the U.S. and China, as well as positive macroeconomic data from China. The U.S. and China officially agreed on the terms of a Phase 1 trade deal, which will reduce some U.S. tariffs on imports of Chinese goods. China, in return, will increase its purchases of U.S. agricultural products, energy and manufacturing goods, and also address some intellectual property issues. While details remain unknown, the U.S. and China are aiming to sign the deal in January. On the macroeconomic front, retail sales growth in China rebounded to 8% year-on-year, up 7.2% in October, driven by an acceleration in online sales to 19% year-on-year in November, up from 15% in October. Online sales represent 20% of total retail sales. Industrial production, meanwhile, grew 6.2% year-on-year versus 4.7% in October, or much better than consensus expectations of plus 5%. Well, that's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data. Good luck trading.